Hey everyone, and welcome! Today we're diving into something super important, your personal finances. We've all been there, right? That feeling of overwhelm when it comes to money. Maybe you're worried about bills or saving for the future seems impossible. The good news is, it doesn't have to be this way. Understanding your finances can be the key to unlocking a life with less stress and more freedom. No matter where you are on your financial journey, whether you're just starting out or looking to take control, this video is for you. Imagine this. You wake up every morning feeling confident and in control of your money. You no longer dread the arrival of bills or the thought of checking your bank account. Instead, you feel empowered, knowing that you have a plan and the knowledge to manage your finances effectively. This sense of control and confidence doesn't come overnight, but with dedication and the right strategies, it is entirely achievable. No more late-night worries about bills, no more feeling trapped by debt. Imagine the relief of knowing that you have a handle on your expenses and that your debt is steadily decreasing. This isn't just a dream. It's a reality that many people achieve through financial literacy and disciplined financial habits. By understanding where your money goes and making conscious decisions about your spending, you can break free from the cycle of debt and start building a more secure financial future. That's the power of financial literacy. Financial literacy is more than just understanding numbers. It's about gaining the skills and knowledge to make informed financial decisions. Whether it's through reading books, attending workshops, or seeking advice from financial experts, increasing your financial literacy can have a profound impact on your life. It empowers you to take control of your finances, set realistic goals, and create a plan to achieve them. When you understand how money works, you can make it work for you. This means knowing how to budget effectively, understanding the importance of saving, and being aware of how investments can grow your wealth over time. It's about making your money work harder for you so you don't have to work as hard for your money. By analyzing your financial situation and making informed decisions, you can create a roadmap to financial success. You can start building a solid financial foundation, one step at a time. This foundation is built on the principles of budgeting, saving, and investing. It starts with small, manageable steps, like setting aside a portion of your income for savings or paying off high-interest debt. Over time, these small steps add up, creating a strong financial base that can support your long-term goals. It's about being patient and consistent, knowing that each step brings you closer to financial stability. It's about making informed choices that align with your goals, whether that's buying a house, traveling the world, or simply having peace of mind. Financial literacy helps you understand the trade-offs and opportunities that come with different financial decisions. It allows you to prioritize your goals and make choices that support your vision for the future. Whether you're saving for a down payment on a house, planning a dream vacation, or building an emergency fund, financial literacy gives you the tools to make it happen. We'll explore practical strategies to help you break free from the cycle of financial stress. These strategies include creating a realistic budget, tracking your spending, and finding ways to reduce expenses. We'll also look at how to manage debt effectively, including strategies for paying off high-interest loans and credit cards. By taking a proactive approach to your finances, you can reduce stress and gain a sense of control over your financial situation. From budgeting tips to understanding investments, we'll cover it all. Budgeting is the cornerstone of financial management, helping you allocate your income to meet your needs and goals. We'll discuss different budgeting methods and tools that can help you stay on track. Additionally, we'll explore the basics of investing, including how to get started, the different types of investments, and how to build a diversified portfolio. Understanding investments can help you grow your wealth and achieve your long-term financial goals. Remember, knowledge is power, and in this case, financial knowledge is the key to unlocking a brighter future. By investing in your financial education, you can make informed decisions that lead to financial security and independence. It's about taking control of your financial destiny and creating a future where you feel confident and empowered. So let's embark on this journey together and take the first step towards escaping the cycle of financial stress and building a brighter financial future. Don't let financial jargon and complicated concepts scare you away. This is about empowering yourself with the tools and knowledge you need to succeed. Together, we'll demystify the world of personal finance and make it accessible to everyone. It's time to ditch the overwhelm and embrace the excitement of taking control. Imagine the possibilities when you have a clear understanding of your finances. You can start building a future you're excited about, one where financial worry is a thing of the past. So are you ready to dive in? Let's get started on this journey to financial freedom together. Let's kick things off by demystifying the stock market. The stock market can often seem like a complex and intimidating place, filled with jargon and fast-paced trading that can overwhelm even the most curious of beginners. But don't worry, we're here to break it down for you in a way that's easy to understand and approachable. By the end of this guide, you'll have a solid grasp of the basics and feel more confident about diving into the world of investing. It might seem intimidating at first, but trust me, it's more accessible than you think. Many people believe that investing in the stock market is reserved for financial experts or those with a lot of money, but that's simply not true. With the right knowledge and tools, anyone can start investing and potentially grow their wealth. The key is to start small, educate yourself, and gradually build your confidence and portfolio over time. In simple terms, the stock market is like a giant marketplace where companies sell pieces of themselves, called stocks, to raise money. These pieces or shares represent ownership in the company. When a company wants to raise capital to expand its operations, develop new products, or pay off debt, it can issue shares to the public. Investors can then buy these shares, providing the company with the funds it needs to grow. In return, shareholders get a stake in the company's future success. When you buy stock in a company, you're essentially becoming a part owner, even if it's a tiny part. This ownership entitles you to a portion of the company's profits, which are often distributed in the form of dividends. Dividends are regular payments made to shareholders out of the company's earnings. Not all companies pay dividends, but those that do can provide a steady stream of income in addition to any potential increase in the stock's value. This means you have the potential to share in their profits as they grow and succeed. As a shareholder, you also have the right to vote on important company decisions, such as electing the board of directors or approving major corporate actions. While your individual vote may not carry much weight if you own only a small number of shares, collectively, shareholders have a significant influence on the company's direction and policies. Now, that's pretty cool, right? But it's important to remember that investing in the stock market also comes with risks. Stock prices can be volatile and can fluctuate based on a variety of factors, including the company's performance, economic conditions, and market sentiment. It's possible to lose money if the value of your stocks decreases. However, with careful research and a long-term perspective, you can mitigate these risks and increase your chances of success. Investing in the stock market can be a powerful way to grow your wealth over time. Historically, the stock market has provided higher returns compared to other types of investments, such as bonds or savings accounts. By investing in a diversified portfolio of stocks, you can spread your risk and take advantage of the growth potential of different companies and industries. Diversification is a key strategy in investing, as it helps to reduce the impact of any single investment's poor performance on your overall portfolio. It's like planting a seed and watching it grow into a beautiful tree. But instead of a tree, it's your money flourishing. Just like a tree needs the right conditions to grow, your investments need time, patience, and careful nurturing. Regularly contributing to your investment account, reinvesting dividends, and staying informed about market trends can help your portfolio grow over time. Remember, investing is a marathon, not a sprint. The goal is to build wealth gradually and steadily, rather than seeking quick short-term gains. To get started, you'll need to open a brokerage account. This is an account that allows you to buy and sell stocks and other securities. There are many online brokerage platforms available today that offer user-friendly interfaces, low fees, and a wealth of educational resources to help you learn the ropes. Some popular options include Robinhood, E*Trade, and TD Ameritrade. When choosing a brokerage, consider factors such as fees, account minimums, and the range of investment options available. Once you've opened your brokerage account, it's time to start researching potential investments. This involves analyzing companies' financial statements, understanding their business models, and keeping an eye on industry trends. There are many tools and resources available to help you with this, including financial news websites, stock analysis platforms, and investment newsletters. It's important to do your due diligence and make informed decisions based on your research. One common strategy for beginners is to invest in exchange-traded funds, ETFs, or mutual funds. These are investment vehicles that pool money from many investors to buy a diversified portfolio of stocks or other securities. By investing in an ETF or mutual fund, you can gain exposure to a broad range of companies and industries with a single investment. This can help to reduce risk and provide a more stable return over time. Another important aspect of investing is setting clear financial goals. Are you investing for retirement, a down payment on a house, or your child's education? Having specific goals in mind can help you determine your investment strategy and time horizon. For example, if you're investing for retirement, you might have a longer time horizon and be able to take on more risk. On the other hand, if you're saving for a short-term goal, you might want to focus on more conservative investments. It's also crucial to stay disciplined and avoid making emotional decisions. The stock market can be unpredictable, and it's easy to get caught up in the excitement of a bull market or the fear of a bear market. However, successful investors stay focused on their long-term goals and stick to their investment plan, even during periods of market volatility. Regularly reviewing and rebalancing your portfolio can help you stay on track and ensure that your investments align with your goals and risk tolerance. In addition to stocks, there are other types of investments you might consider, such as bonds, real estate, and commodities. Each type of investment has its own risk and return characteristics, and diversifying across different asset classes can help to further reduce risk and enhance returns. For example, bonds tend to be less volatile than stocks and can provide a steady stream of income, while real estate can offer both income and potential appreciation. Finally, it's important to keep learning and stay informed about the markets. The world of investing is constantly evolving, and staying up to date with the latest trends and developments can help you make better investment decisions. There are many ways to continue your education, including reading books and articles, taking online courses, and attending seminars and webinars. Joining an investment club or finding a mentor can also provide valuable insights and support as you navigate your investment journey. In conclusion, investing in the stock market can be a rewarding way to build wealth and achieve your financial goals. While it may seem daunting at first, with the right knowledge, tools, and mindset, anyone can become a successful investor. Start by educating yourself, setting clear goals, and developing a disciplined investment strategy. Remember, the key to successful investing is patience, persistence, and a long-term perspective. Happy investing! Now let's break down the basics of stocks. Think of a stock like a little piece of a company. When you buy a share of stock, you're essentially buying a small ownership stake in that company. That's why it's called a share. The value of a stock represents how much investors are willing to pay for a piece of that company. This value can fluctuate based on various factors, like the company's performance, industry trends, and overall economic conditions. Don't worry, we'll dive deeper into those factors later on. But for now, just remember that investing in stocks means participating in the growth potential of companies you believe in. Just like there are different types of cars or shoes, there are different types of stocks. Each type comes with its own set of characteristics and risks. Let's explore a couple of the most common types: common stock and preferred stock. Common stock is the most prevalent type of stock. When people talk about buying stock, they're usually referring to common stock. It gives you voting rights in company decisions, and you might receive dividends, which are a share of the company's profits. Preferred stock, on the other hand, typically doesn't come with voting rights. However, it often offers higher and more consistent dividend payments compared to common stock. It's like getting a VIP pass to the company's profits. Ready to take the plunge into the world of investing? It's easier than you might think. The first step is to open a brokerage account. This is like a bank account for your investments, where you can buy and sell stocks. There are many online brokerage platforms available, making it convenient and accessible for everyone. Once you have your account set up, you can start researching and investing in companies that align with your financial goals. Remember, it's always wise to start small and gradually increase your investment amount as you gain more knowledge and confidence. As a beginner investor, it's essential to navigate the market with caution and a sprinkle of wisdom. Here are a few tips to guide you on your investment journey. Do your research, diversify your portfolio, and think long-term. Before investing in any company, take the time to understand its business, financial health, and growth prospects. Knowledge is your best friend in the stock market. Don't put all your eggs in one basket. Diversifying your portfolio by investing in different companies, industries, and asset classes can help mitigate risk. The stock market can be volatile in the short term. It's crucial to have a long-term perspective and not panic sell when the market takes a dip. Imagine your investment portfolio as a beautiful garden. Just like you wouldn't want to plant only one type of flower, you don't want to invest in just one company or industry. Diversification is key to building a resilient portfolio that can weather market storms. By spreading your investments across various asset classes, such as stocks, bonds, and real estate, you can reduce the impact of any single investment's performance on your overall portfolio. Think of it as creating a safety net for your money. If one investment isn't performing well, others can help cushion the blow. The stock market is like a roller coaster with its ups and downs. There will be times when the market soars to new heights, and there will be times when it takes a tumble. Understanding these fluctuations and not letting emotions dictate your investment decisions is crucial. Remember, short-term market swings are normal and shouldn't deter you from your long-term goals. When the market dips, it can present an opportunity to buy quality stocks at a discounted price. It's like a sale at your favorite store. Investing in the stock market is a marathon, not a sprint. It requires patience, discipline, and a long-term perspective. You know, Rome wasn't built in a day, and neither is a successful investment portfolio. Don't get discouraged by short-term market fluctuations or expect to get rich quick. Instead, focus on building a solid foundation for your financial future by consistently investing over time. Remember the power of compound growth. As your investments grow, they generate earnings, and those earnings can be reinvested to generate even more earnings. While it's fantastic to empower yourself with financial knowledge, there may be times when seeking advice from a qualified financial advisor is beneficial. A financial advisor can provide personalized guidance based on your specific financial situation, goals, and risk tolerance. They can help you create a comprehensive financial plan, navigate complex investment options, and ensure you're on track to achieve your financial aspirations. Remember, seeking professional advice doesn't mean giving up control of your finances. It's about having a trusted partner to guide you along the way. Before we wrap up our exploration of investing and the stock market, let's not forget the most important investment of all, investing in yourself. Continuously learning, acquiring new skills, and expanding your knowledge base is an investment that will pay dividends throughout your life. The more you invest in yourself, the more valuable you become, both personally and professionally. So, never underestimate the power of investing in your education, personal growth, and well-being. It's the foundation for a fulfilling and financially secure future. Let's dive into the world of credit cards. They're often seen as a double-edged, sword-powerful tools for convenience and building credit, but potentially dangerous if not used responsibly. We've all heard those cautionary tales of credit card debt spiraling out of control. But don't worry, understanding how credit cards work can empower you to use them to your advantage while avoiding common pitfalls. Think of credit cards as a financial tool, like a hammer. Used correctly, a hammer can build something amazing. Used carelessly, it can cause damage. The key is understanding how to wield that power responsibly. So how do credit cards actually work? Credit cards are a ubiquitous part of modern financial life, but their inner workings can sometimes seem a bit mysterious. Let's break it down step by step to understand the mechanics behind these small pieces of plastic that wield so much power in our daily transactions. In simple terms, when you use a credit card, you're essentially borrowing money from the credit card issuer to make a purchase. This issuer could be a bank or a financial institution that has provided you with a line of credit. When you swipe your card or enter your card details online, the issuer pays the merchant on your behalf, and you agree to pay back the issuer later. You then have a set period, typically a month, to pay back that borrowed amount. This period is known as the billing cycle. At the end of each billing cycle, the issuer sends you a statement detailing all your transactions and the total amount you owe. This statement also includes a due date by which you need to make at least the minimum payment to avoid late fees. If you pay your balance in full and on time each month, you get to use the credit card issuer's money for free. This means you can enjoy the convenience of using a credit card without incurring any interest charges. Essentially, you're taking advantage of a short-term, interest-free loan. No interest charges, no fees, just pure convenience. This is one of the major benefits of using a credit card responsibly. It allows you to manage your cash flow more effectively, as you can make purchases now and pay for them later without any additional cost. That's the beauty of responsible credit card use. By paying your balance in full each month, you can build a positive credit history, which can be beneficial for your financial future. A good credit history can help you secure loans, mortgages, and even better interest rates on future credit cards. However, if you don't pay your balance in full, that's when interest charges kick in. Credit card issuers charge interest on the remaining balance, and this interest can add up quickly. The interest rate on credit cards is typically much higher than other types of loans, which means carrying a balance can become very expensive. And trust me, credit card interest rates can be much higher than other types of loans. For example, while a mortgage might have an interest rate of 3–5%, credit card interest rates can be 15–25% or even higher. This high interest rate can make it difficult to pay off your balance if you only make the minimum payment each month. So it's crucial to avoid carrying a balance whenever possible. By paying off your balance in full each month, you can avoid these high interest charges and keep your financial health in check. Additionally, avoiding carrying a balance can help you maintain a good credit score, which is important for your overall financial well-being. Now, let's delve deeper into some of the key features and benefits of credit cards that make them such a popular financial tool. One of the most attractive features of credit cards is the rewards programs they offer. Many credit cards provide rewards in the form of cash back, points, or miles for every dollar you spend. These rewards can add up quickly and can be redeemed for a variety of things, such as travel, merchandise, or statement credits. Another important feature of credit cards is the fraud protection they offer. If your credit card is lost or stolen, or if you notice unauthorized charges on your account, you can report it to your issuer, and they will investigate the charges. In most cases, you are not held liable for fraudulent charges, which provides peace of mind when using your credit card for purchases. Credit cards also offer purchase protection, which can be very beneficial. For example, if you buy an item with your credit card and it is damaged or stolen within a certain period, your credit card issuer may reimburse you for the cost of the item. Some credit cards also offer extended warranties on purchases, which can provide additional coverage beyond the manufacturer's warranty. In addition to these features, credit cards can also help you build your credit history. By using your credit card responsibly and making on-time payments, you can build a positive credit history, which can be beneficial for your financial future. A good credit history can help you secure loans, mortgages, and even better interest rates on future credit cards. However, it's important to be aware of the potential pitfalls of credit card use. One of the biggest risks is overspending. Because credit cards allow you to make purchases without immediate payment, it can be easy to lose track of your spending and accumulate a large balance. To avoid this, it's important to create a budget and stick to it, and to regularly review your credit card statements to keep track of your spending. Another potential pitfall is the temptation to make only the minimum payment each month. While making the minimum payment will keep you in good standing with your credit card issuer, it will not help you pay off your balance quickly. In fact, it can lead to a cycle of debt, as the remaining balance continues to accrue interest. To avoid this, it's important to pay off as much of your balance as possible each month, and to avoid carrying a balance whenever possible. In conclusion, credit cards can be a valuable financial tool when used responsibly. They offer convenience, rewards, and protection, and can help you build a positive credit history. However, it's important to be aware of the potential risks and to use your credit card wisely to avoid accumulating debt and paying high interest charges. By understanding how credit cards work and using them responsibly, you can take advantage of their benefits and maintain your financial health. Now that we understand the mechanics of credit cards, let's talk about using them wisely. The golden rule: only spend what you can afford to pay back in full each month. Treat your credit card like a debit card. If you don't have the money in your account to cover the purchase, don't buy it. It's also essential to track your spending diligently. Many credit card companies offer online tools and apps that make it easy to monitor your purchases, track your balance, and set up payment reminders. And speaking of payments, always make your payments on time. Late payments can result in hefty fees and damage your credit score. One of the perks of using credit cards responsibly is the potential to earn rewards. Many credit cards offer cashback, travel points, or other incentives for your spending. It's like getting paid to shop. But here's the catch: don't let the allure of rewards tempt you to spend more than you normally would. Remember, rewards are only beneficial if you're not paying interest charges that outweigh the value of those rewards. Take the time to research and compare different credit cards to find one that aligns with your spending habits and financial goals. Some cards offer higher cashback rates on specific categories, like groceries or gas, while others provide travel perks or airport lounge access. Now let's shift gears and talk about the cornerstone of a solid financial foundation: savings accounts. While investing in the stock market offers the potential for higher returns, savings accounts provide a safe and accessible place to store your hard-earned money. Think of savings accounts as your financial safety net, your emergency fund, your peace of mind cushion. Having money set aside for unexpected expenses or life's little curveballs can make all the difference. Plus, watching your savings grow, even if it's at a slower pace than investments, can be incredibly motivating and empowering. Just like there are various types of credit cards, several savings account options cater to different needs and financial goals. Let's explore a few of the most common types: traditional savings accounts, high-yield savings accounts, and money market accounts. Traditional savings accounts are offered by most banks and credit unions. They typically come with low interest rates but provide easy access to your funds. High-yield savings accounts, as the name suggests, offer higher interest rates than traditional savings accounts, helping your money grow faster. Money market accounts often have even higher interest rates than high-yield savings accounts, but they may come with restrictions on withdrawals or minimum balance requirements. One of the beautiful things about savings accounts is the magic of compound growth. In simple terms, compound growth means earning interest on your initial deposit and on the accumulated interest. It's like a snowball effect for your money. The higher the interest rate, the faster your savings will grow. While interest rates on savings accounts might seem small, don't underestimate the power of compound growth over time. Even small, consistent deposits into a savings account can add up to a significant amount over the long term. Now let's talk about the importance of building an emergency fund. Life is full of surprises, and not all of them are pleasant. Having an emergency fund can provide a financial cushion to help you navigate unexpected expenses without going into debt. Aim to save 3 to 6 months' worth of living expenses in your emergency fund. This might seem like a daunting goal, but remember, even small, consistent contributions add up over time. Having an emergency fund can provide peace of mind, knowing that you're financially prepared for whatever life throws your way. Once you've mastered the basics of credit cards and savings accounts, you can explore other financial products that align with your financial goals. These might include certificates of deposit, CDs, money market funds, or even index funds. CDs offer a fixed interest rate for a set period, providing a predictable return on your investment. Money market funds invest in short-term debt securities, offering a relatively safe and liquid investment option. Index funds track a specific market index, such as the S&P 500, providing a low-cost way to invest in a diversified portfolio of stocks. Congratulations! You've made it through our crash course on credit cards, savings accounts, and other financial products. Remember, taking control of your finances is a journey, not a destination. By understanding the basics, making informed decisions, and seeking guidance when needed, you can build a solid financial foundation for a brighter future. So, go out there and make your money work for you. All right, let's dive into the exciting world of cryptocurrency. Don't worry if it seems a bit mysterious at first. We'll break it down in a way that's easy to grasp, even if you're new to the whole digital currency scene. In the simplest terms, cryptocurrency is like digital money. It exists solely online and uses cryptography, a fancy word for secure coding, to keep transactions safe and sound. The cool thing about cryptocurrency is that it operates independently of traditional financial institutions like banks. It's decentralized, meaning it's not controlled by any single entity. You've probably heard of Bitcoin, the most famous cryptocurrency out there. But did you know there are thousands of other cryptocurrencies, each with its own unique features and purposes? Think of it like the world of cars. You've got your trusty sedans, your sporty coupes, and your rugged SUVs. Similarly, cryptocurrencies come in different flavors to suit various needs and investment appetites. Some cryptocurrencies, like Ethereum, are designed for more than just transactions. They act as platforms for building decentralized applications, like games and financial tools. It's a whole new world of possibilities. Now, let's talk about blockchain, the revolutionary technology that underpins cryptocurrencies. Imagine a digital ledger that keeps track of every single transaction made with a particular cryptocurrency. This ledger isn't stored in one central location, but rather on countless computers around the world. This distributed nature makes it incredibly secure and transparent. Every time a transaction occurs, it's bundled into a block and added to the chain, hence the name blockchain. Once a block is added, it's virtually impossible to alter or tamper with. So, you're ready to dip your toes into the crypto waters? The first step is setting up a digital wallet. Think of it like your digital piggy bank for storing your precious crypto holdings. There are different types of wallets, each with varying levels of security and convenience. Hardware wallets offer the highest level of security, while software wallets are more user-friendly for everyday transactions. Once you have a wallet, you can buy and sell cryptocurrencies on exchanges. These platforms act as intermediaries, connecting buyers and sellers from around the globe. Now, let's address the elephant in the room: the risks and potential rewards of investing in cryptocurrency. Like any investment, crypto comes with its fair share of ups and downs. Cryptocurrency markets are known for their volatility, meaning prices can fluctuate dramatically in short periods. This volatility can create opportunities for significant gains, but also carries the risk of substantial losses. It's crucial to approach cryptocurrency investing with caution. Do your research thoroughly and never invest more than you can afford to lose. Investing in cryptocurrency is not for the faint of heart. It's often compared to riding a roller coaster, with its thrilling highs and stomach-churning lows. One day your investment might be soaring to new heights, and the next, it could be taking a dip. It's essential to buckle up, hold on tight, and be prepared for a wild ride. Remember, emotional decision-making can be your worst enemy in the crypto world. Don't panic sell when the market dips, and don't get caught up in the hype when prices skyrocket. As with anything online, security is paramount in the world of cryptocurrency. Your digital assets are valuable, And unfortunately, there are always those looking to take advantage. Choose your wallets and exchanges wisely, opting for reputable providers with robust security measures. Enable two-factor authentication whenever possible, adding an extra layer of protection to your accounts. Be wary of phishing scams and suspicious links. Remember, if it sounds too good to be true, it probably is. Protecting your digital assets starts with being vigilant and informed. Cryptocurrency has sparked intense debate about its potential to disrupt traditional financial systems. Some believe it's the future of finance, while others remain skeptical. One thing's for sure, cryptocurrency has the potential to revolutionize how we think about and interact with money. From faster cross-border payments to increased financial inclusion, the possibilities are vast. It's still early days in the crypto world, and only time will tell how it will shape the future of finance. But one thing's for certain, it's a force to be reckoned with. Cryptocurrency isn't just about buying low and selling high. It has a wide range of potential applications beyond investment. From facilitating secure and transparent online payments to revolutionizing supply chain management and even transforming digital identity, cryptocurrency's potential uses are constantly evolving. As the technology matures and gains wider adoption, we can expect to see even more innovative and impactful applications emerge, blurring the lines between the physical and digital worlds. The world of cryptocurrency is undoubtedly exciting, full of innovation and potential. But it's important to remember that it's still a relatively new and evolving landscape. Proceed with caution, do your research thoroughly, and don't be afraid to seek guidance from reputable sources. Remember, knowledge is power, especially in the ever-evolving world of cryptocurrency. So go forth and explore the digital frontier, but always remember to tread carefully and invest responsibly. Let's talk about budgeting. Now, before you click away thinking, "Ugh, not another budgeting lecture," hear me out. Budgeting doesn't have to be a scary, restrictive word. It's simply about taking control of your money and making it work for you. Think of a budget as a roadmap for your finances. It helps you track where your money is going, identify areas where you can save, and make informed decisions about your spending. By creating a budget, you're essentially taking charge of your financial future, paving the way for a more secure and fulfilling life. One of the biggest misconceptions about budgeting is that it's all about deprivation and saying no to everything fun. But that couldn't be further from the truth. Budgeting isn't about restricting yourself. It's about making conscious choices about your spending. It's about aligning your spending with your values and priorities. If travel is important to you, a budget can help you save for that dream trip without breaking the bank. Budgeting simply gives you the freedom to spend money on the things that matter most to you, guilt-free. Just like there's no one-size-fits-all approach to fashion or fitness, there's no single right way to budget. The key is to find a method that works best for you, your personality, and your lifestyle. If you're a spreadsheet whiz, creating a detailed budget spreadsheet might be your jam. If you prefer a more visual approach, there are tons of user-friendly budgeting apps available that make tracking your finances a breeze. Some people even prefer the cash envelope system, where you allocate specific amounts of cash to different spending categories each month. Experiment with different methods and find what clicks for you. The first step to creating a realistic budget is to understand where your money is currently going. It's amazing how those little expenses can add up without us even realizing it. Take some time to track your spending for a month or two. You can do this manually, use a budgeting app, or even check your bank statements for a quick overview. Once you have a clear picture of your spending patterns, you can start to identify areas where you can cut back and save more effectively. As you track your spending, you'll likely uncover some spending leaks. those sneaky expenses that drain your bank account without you even noticing. These could be anything from that daily latte habit to subscriptions you no longer use. The good news is, once you've identified these leaks, you can take steps to plug them. Consider making your coffee at home a few times a week, or downgrade to a more affordable streaming service. Small changes can make a big difference over time. A budget without goals is like a ship without a sail, it's going nowhere fast. Setting financial goals gives you something to work towards and helps you stay motivated on your budgeting journey. Your goals can be short-term, like saving for a down payment on a car, or long-term, like planning for retirement. The key is to make them specific, measurable, achievable, relevant, and time-bound. Smart. Remember, your goals are personal to you. Don't be afraid to dream big and set your sights high. If you're feeling overwhelmed by the thought of creating a budget from scratch, the 50-30-20 rule can provide a helpful framework. This rule suggests allocating 50% of your after-tax income to your needs, 30% to your wants, and 20% to your savings and debt repayment. Needs include essentials like housing, food, transportation, and healthcare. Wants are those non-essential items that bring you joy, like dining out, entertainment, and hobbies. One of the best things you can do for your financial well-being is to automate your savings. Think of it as paying yourself first. Set up automatic transfers from your checking account to your savings account each month. You can even automate contributions to your retirement accounts, such as a 401(k) or IRA. The beauty of automation is that it takes the willpower out of saving. You're less likely to spend money you don't even see in your checking account. Remember, your budget isn't set in stone. It's a living, breathing document that should evolve with your changing financial situation and goals. Review your budget regularly, say monthly or quarterly, and make adjustments as needed. Life throws curveballs, and your budget should be flexible enough to adapt. Don't be afraid to experiment with different approaches and find what works best for you. The key is to stay engaged with your finances and make conscious decisions about your spending. Budgeting isn't just about numbers and spreadsheets. It's also about celebrating your progress and acknowledging your financial wins, big or small. Did you stick to your budget for a whole month? That's amazing. Did you pay off a credit card? Give yourself a pat on the back. Recognizing your achievements can help you stay motivated and on track. Remember, financial freedom is a journey, and every step you take towards it deserves to be celebrated. Congratulations! You've reached the end of our whirlwind tour of personal finance. We've covered a lot of ground, from demystifying the stock market to mastering the art of budgeting. But remember, this is just the beginning of your financial journey. Think of the knowledge you've gained as seeds you've planted. With consistent effort and a little nurturing, those seeds will grow into a thriving financial future, full of possibilities and freedom. The journey might have its ups and downs, but always remember that you have the power to shape your financial destiny. Let's take a moment to recap some of the key takeaways from our financial adventure. We started by emphasizing the importance of investing in yourself. Continuously learning and expanding your financial literacy is an investment that will pay dividends throughout your life. Next, we dove into the exciting world of investing, exploring the stock market and the potential of cryptocurrency. Remember, investing involves risks, but it also offers the potential for significant rewards over time. We then shifted gears to the essential practices of responsible credit card use, emphasizing the importance of timely payments and avoiding debt. Throughout our journey, we've stressed the importance of making informed financial decisions. Knowledge is power, especially when it comes to managing your money. By understanding the basics of personal finance, you can avoid common pitfalls and make choices that align with your financial goals. Whether you're choosing a credit card, opening a savings account, or exploring investment options, take the time to research your options, compare offers, and seek guidance from reputable sources. Don't be afraid to ask questions, clarify doubts, and advocate for your financial well-being. Remember, there are resources available to help you make informed decisions every step of the way. Now that you're armed with valuable financial knowledge, it's time to put that knowledge into action. Creating a budget might seem daunting at first, but remember, it's a journey, not a destination. Start by tracking your spending, identifying areas where you can cut back, and setting realistic financial goals. Explore different budgeting methods and find one that suits your lifestyle and preferences. Remember, even small steps can lead to significant progress over time. The key is to start somewhere and keep moving forward. As we wrap up our financial exploration, I want to leave you with a question. What financial adventure are you most excited to embark on next? Is it diving deeper into the world of investing, mastering the art of budgeting, or exploring alternative financial strategies? The choice is yours. Remember, personal finance is just that, personal. There's no one-size-fits-all approach. The key is to find what works best for you, your values, and your financial aspirations. So go forth and explore the vast and exciting world of personal finance. Thank you for joining me on this incredible financial journey. I hope you found it informative, empowering, and maybe even a little bit fun. Remember, financial literacy is a lifelong pursuit. Stay curious, keep learning, and don't be afraid to ask for help along the way. I'd love to hear about your financial goals, challenges, and successes. Let's continue the conversation in the comments below. Which financial topic resonated with you the most? What would you like to learn more about? Share your thoughts, questions, and insights. Let's empower each other on our journeys to financial